Hello and welcome to Crux Investor. We caught up with Mark Chalmers, CEO at Energy Fuels. They've been going on quite the tear. Recently, we talk about where Mark attributes that value. Is it the rare earth components or is it the uranium? Potentially, probably both. We get an update on what's happening in the market, according to Mark, with regards to uranium. And we also look at the puzzle which they're putting together with rare earths, new names and relationships being formed every day. If you want our thoughts and opinions about how they're going about doing that, what we think of the company and indeed Mark, you can find that at cruxinvestor.com. We'd love your feedback too. So give us a like, leave your thoughts below, we'll get back to everyone. And if you want to see precisely what we talked about, take a look in the description below. Mark Chalmers, how are you, sir?
Always good, Matt.
Glad to hear it. Glad to hear it. Share price not doing too bad either.
No, look at the locomotive continues, and so look, we're very pleased with this strong sentiment that we're seeing for all things uranium and rare earths. So we're riding the wave and looking forward to the future.
What I'm trying to work out is where's the value being contributed? Is it the uranium dominant US uranium producer component, or is it this new story, this new kid on the block, rare earths?
Look, it's a difficult question to answer, but I think we're pretty much trading in the pack with the uranium equities, and I think that at some stage people will start to appreciate and value the rare earth side of our business more, which gives us additional lift. But we're right in the middle of the pack with the uranium groups. And we'll see how that all unfolds. But certainly everybody's getting the lift right now.
If it was based on the percentage of questions that I've been sent in, I think it'd be 80% rare earths. But I'm sure that's not true. Should we start with uranium? The uranium space, since we last spoke, has kind of unfolded and exploded in a way. Well, obviously, people are talking about this physical uranium trust that's with Sprott and the UPC acquisition, what's going on there, the marketing leverage, phenomenal, but also, quite frankly, the exposure to larger North American funds. How do you see that? Why did they do that? Does it make sense to you?
I mean, Sprott?
Yeah.
Yeah. Well, look. And I always say this: speculative buying is up to be speculative selling. But look, I think that this awakening on the uranium front and the nuclear front, when people are looking for carbon-free baseload energy, is really getting traction, not just here in the United States but around the world. I think last time we talked, I'm not sure if this had happened, but the EU is looking at nuclear power more positively than they have in the past as well. Small modular reactors. So I think a lot of this is culminating in this excitement for nuclear energy, and it's long overdue. I mean, it's been over 10 years since Fukushima. You're seeing the Japan starting to get back on the bandwagon more than they were. Look, it's an exciting time, and and again, what are the options? If you don't have nuclear in the mix, and it's not the only thing in the mix, certainly going to have other renewables like wind and solar, and hydro, and probably natural gas for foreseeable future. But you have to have nuclear in the mix.
Let me talk to you about the mood of the nation in North America, okay? Because we see what's happening in Europe. That's great. But Biden's requesting $6 trillion, $14 billion is being allocated towards advancing the nuclear cause. Interestingly, no mention of the $75 million, which had been a bipartisan request for a uranium reserve. I thought that was interesting, but it's bigger than that. There is a positive sentiment towards nuclear energy as part of the energy solution going forward. I couldn't help but notice you've done something with Penn State and also with the DOE.
Yeah, we announced it was a month or so ago that we had this contract with the DOE. This is focused on the coal-based resources, rare earth recovery from coal-based resources. And that was the second award that we received from the Department of Energy. There are some other awards coming that we will apply for. It's not, these are studies, but it certainly is a good sounding board with the Department of Energy and the Department of Defense in certain cases for the efforts and the progress that we're making in this rare earth space. So, we're still going for the brass ring here when it comes to the rare earths. We're going for the brass ring when it comes to uranium. As a matter of fact, all critical materials. We're building that narrative for all the right reasons, and we just think it's a great place to be.
No, it is for sure. But just stick with uranium for a bit. Is it a case the market's moving, and why I ask what the mood is, because there's been a real kind of increase in equities for uranium juniors without anyone having to do too much. Spot price hasn't exactly been helping, hasn't really done too much. But the buying has been very noticeable, been palpable in Australia and in North America, Canada. Are you just sitting back and just letting the market do its thing, or are you actually allocating funds, time, and effort to advancing your uranium efforts internally?
Well, we're not just sitting back. I mean, we've been doing reviews internally on our various projects when it comes to restarting our uranium assets. Both our ISR and our conventional assets. We're literally at this just 30 minutes ago, I was talking to our mining engineer with regard to the Pinyon Plain mine. So no, we're doing our homework to figure out, what would come on first and second and third, and how we would get the best economic outcome and increase production. So we're not sitting on our hands here, and I think that we're doing every bit as much, if not more, than anybody else out there in the uranium space right now. Even though we're still doing a lot of work on the rare earth front.
Okay. And do you think that moves by Sprott with UPC? Do you think that's going to advance the timing in terms of this price discovery? Because we were talking to one uranium company recently who had been out buying in the market, and they said they found it particularly hard. They were being offered product in September and as far out as 2022. It's getting difficult out there. Does that mean that things are going to move a little bit more rapidly, or is it steady as she goes and see what happens?
Yeah, look, I think that certainly the Sprott move has gotten a lot of attention. People buying physical uranium. That just mops up what's out there and available. So look, and I think it bodes well for the future in the uranium space. We know that it costs more to replace those pounds through new production than it does to buy them. And so, I think it has, a value for the future as the market improves. So, it surprised me with how many people have jumped in purchasing uranium. It's probably not a bad plan for some. I'm not so sure what the plan is for a few. But let's just watch it. I think that anything that increases the focus and attention on the uranium space and on baseload carbon-free energy is good for the sector.
But are you in conversations with these utilities? Are they starting to approach you? Because if someone said the other day that actually UPC had bought in total £16 million ever, which doesn't sound like a lot. America consumes 55 million pounds a year. So I'm trying to understand the nature of the market. We've constantly been trying to understand the nature of the supply side of things. Where are pounds sitting? Who has them all?
Yeah, look, we routinely talk to the utilities, and I've said this before. A lot of the utilities are addicted to cheap. If they can get cheap uranium, they'll buy cheap uranium, and they continue to buy cheap uranium. Are they thinking about things could be changing in the winds? I think they are, but they're not rewarded for buying more expensive uranium if the price doesn't move now, and they're not risk takers. So they just want security of supply, and if they can get it cheaply, they're going to buy it at the lowest price. So look, I haven't seen any real movement from the utilities that says that they think it's game on securing production-driven uranium pricing, but that will change. And when it changes, it will change overnight. It will change so quickly that everybody's heads will spin, because just like we saw in 2006, 7, 8 period, when the price went right up through the sky, it changed and everybody started buying uranium. Everybody started doing contracts, so that's how it'll happen. It's not going to just, inch up. When it moves, it will really move, in my opinion.
So when it does move and it goes up quickly, with your experience or your opinion, is you've said to me a phrase before, not all boats will float. Do you think what was the point at which all boats stop floating? Because right now they seem to be taking advantage of the situation. People are distributing their bets into these uranium equities fairly evenly across the board. Everyone seems to be doing quite well. Thank you very much.
Yeah. No, look, as I said, everybody has benefited, and look, the price does need to move because the equities have moved like the price is, $50 right now, in my opinion. So, but yeah, I think that it does need to move because I think that, there's not an economic outcome for anyone, not including Cameco at, low $30 uranium. So, yeah, I think that as I said, when the price starts to move, I think it'll move quite quickly. I think that everybody's just got to be ready to go at that time. So many of the wannabes will not ever be able to deliver any uranium, new production. It's just not going to happen. And even when you look back in that 2006, 7, 8, you look at some of the reports done by the WNA, it's shocking how little new production came on, even when the price moved like it did.
It's interesting. The wannabe producers, right now, it's very hard for retail to work out who's real and who's not, because everyone talks the same game, right? But I'm intrigued because at some point when this thing, if it does shoot off, everyone's going to want to shoot up that curve. But there comes a point when the company's got to start delivering. So what are we looking for? Are we looking for companies that, are stretching the delivery point out? Are we looking for companies that can deliver? What should we be looking for in your experience?
Yeah, I always say I gravitate for people with proven experience that have done it before. There's a lot of fast talkers in this space that, that it's easy to talk about producing uranium. It's difficult to produce uranium. But I think that there are, existing producers that have shown they can do it. Certainly there's, good new deposits like Arrow and NextGen that will make it into the market. And look, if there will be some new startups that could be quite interesting in time. But I would stick to those that have done it before or have extraordinarily good deposits that are well recognized.
Okay, let's get on to rare earths, because like I said, about 80% of our questions about rare earths. People are absolutely intrigued. Critical minerals, strategic minerals, whatever you want to call them. Big conversations going on in US, Europe, even Asia, and how that all works. What have you been up to since we spoke? Because you've assembled quite a meaningful team. But yeah. What is the process that you're going through?
Well, we're looking at it in a holistic way, when it comes to expertise, with people that have proven track records with rare earths. We're looking at feeds, we're looking at the crack leach separation, and starting to look at metals and alloys. So we're really trying to cover all the bases to demonstrate that we're going for full integration in the United States. And we've got this relationship with Neo, which is alive and well and very healthy. And the fact that, they have the ability to separate in Europe, and there is no capability in the United States currently. So no, we're looking at it in a broad brush fashion, but in each of those areas that I just mentioned, we're really drilling down into details. And I think the main ones are the expertise. We started doing our scoping work with Carsters out of France when it comes to separation. That's advancing. We're still getting inbounds on supply of monazite sands. People are watching the progress we're making, and they're taking notice, and around the world they're taking notice, and they're impressed with the speed and the focus that we're executing our plan. So, we're again 100% focused for full integration and having a low strike rate on our capital and operating costs. So the phone keeps ringing. Matter of fact, it was ringing a minute ago. I had to hang up on it. But we're going to get there.
Yeah, no, I get that. And I don't want to go over old ground in terms of the government component. We've talked about that before. People can look at those interviews about your view on that, because I don't imagine too much change right now. But what I am interested in is having put the team together and starting to do these various tests and so forth. You've got a couple of sources of monazite, which is great, because you've got to feed the beast, which is the White Mesa mill. So are we expecting to see more of these contracts being signed, or are the existing two suppliers going to supply you more, or are you going to look for other parties?
Look, and I think it's going to be a combination. We are, have the arrangement with Chemours. We signed the MOU with Hyperion. We're talking to probably at least a half a dozen other producers of monazite around the world, and it can be. We're going to build the book for feed to the mill in a number of different ways, and we provide different options. The Chinese just, established themselves as a monazite processor. They said, we're open for business. We'll buy monazite, and they've been buying monazite from various parties around the world. We're doing the same thing, but we're also making sure that people understand, particularly those that have significant quantities of monazite, that we will consider other options in addition to purchasing their monazite. So, we want to demonstrate to the market that we have adequate sources of feed from various sources, that it's secure, it justifies full integration, and it also justifies that we're going to achieve significant scale in the market. So, but at the same time, we have to be able to do the value chain add when it comes to the crack, the leach, the separation, and potentially metals and alloys. And each of those steps have margins. And so we're very focused on that as well.
Okay, and I do want to come back to that, but just on the kind of the feed. Obviously, monazite's one thing. Are you looking at different types of feed and supply, whether it be from tailings or clays or other types of ore which you may be able to extract rare earths from, just in terms of diversifying the risk in case something happens with the monazite market, prices go up, affects your margins?
Yeah. Well, look, at our main focus is on the monazite sands because of the grades, and there seems to be fairly significant quantities of monazite sand material out in the market around the world. But like, for example, the DOE contract is on rare earths from coal-based resources. So that's another potential source in time. Ultimately, we will start looking at, some of the hard rock monazite projects that are out and around in either North America or around the world. But our first focus is the monazite sands. And that's kind of built around this first relationship we have with Chemours. And we do believe that there are sources out there that are ready and willing and wanting to come to another jurisdiction outside of China. And White Mesa is that other jurisdiction right now.
Yeah. So you're stick to the knitting for a while. Monazite is the focus, but there's optionality there. I'll say with the Penn State stuff, for instance, right? Is that what you're saying?
Yeah, in time, and but the beauty of the monazite sand, and I call it the monazite plan, is it's the economics, it's the grade, it's the economics of processing, it's the fact that it contains uranium and it contains thorium, which potentially might have some value in time as well. And those are all differentiators of what our strategy is compared to others. What we want is what others can't deal with. And it's the best sources of rare earths out there in the entire world. So, why look at things that are going to be less economic? We're focused on the big win here.
Okay.
And as I said, the brass ring and the monazite sands, we believe is the, it's where our focus should be.
Okay. Okay. Start at the top. Start with the biggest revenue opportunity, and work your way down the list. Okay, fine. Who's calling you?
Geez, I can't say, but I can say that all the monazite sand producers that I know of and in the world, and every now and then I get surprised with somebody else. They know what our strategy is, and some of them, like Chemours, came across quite quickly. They were shipping to China. Of course, having a U.S.-centric focus was important to them. But others are watching us because they want other options for selling their monazite sand. So pretty much if you just say that those who produce monazite around the world, they're the ones that are calling us, that covers it pretty effectively.
Any automotive manufacturers?
Well, I've said, publicly on a number of occasions, we are getting inbounds from, a couple major car manufacturers that have heard and seen some of the presentations I've done on the rare earths. And, it's still early days, but, they're recognizing that they need diversification of the critical materials that they need for this EV revolution. And so that's getting quite interesting. But it's even more interesting that they're calling us, not the other way around.
So, and just finish on the monazite, I promise, is if I look at the market at the moment, there's not too many players, obviously. And if I look at people like MP, who kind of had a renaissance, you could argue, given their previous debt problems, they're starting to take market share. Are you going to miss the boat, or do you think there's enough space for everyone to play?
Look, the forecast I'm looking at, they're saying that the demand for rare earth elements, particularly the magnetic rare earths, is going to increase fivefold in the next 10 years. I think that the market requires and needs the production from all the above. And so, China is going to always play a major role. MP, Energy Fuels, Lynas, and others. There's room for everyone who can be cost competitive and who can actually produce. Okay, so you got to be able to produce, and then you got to be cost competitive. Look, if the MP plan is different than ours. They've got a mine. They're focused on bastnäsite. They're cash positive because they can ship their concentrate, and not a rare earth carbonate, but it's like a flotation concentrate to China and actually make a profit on it based on its rare earth content. And they are also looking at restarting some of their process plant at Mountain Pass. So it's a different focus, and our focus on the monazite that's got high distributions in both the light and the heavies. A lot of the bastnäsite does not have heavies or has very limited heavies. So we just have a different strategy in how we're going forward versus Mountain Pass.
Is your strategy, or do you still feel that your strategy can avoid having a Chinese component to it?
That's the plan. Again, it's a small world. A lot of the manufacturing of the end products still are done in China, but our focus is to carry out as many of the steps of integration that we can at White Mesa or in the vicinity to get the economics and the margins required for sustainability.
Okay, how much longer will you have to spend? How much more money will you have to spend before you can actually work out the economics of what White Mesa could become in terms of potentially separation unit of its own? Because you've given us a number in the past, but have you done any more work around that?
Well, I said we've got the scoping study underway with Caristers. They're saying that the scoping study would be plus or minus, say, 30% for separation. So that would be more accurate than what we have right now. Our financial models that we have, I think are quite accurate because we can pin down a lot of the costs, whether it's securing feed, cracking and leaching, transporting, and even separation. We've got numbers that have a basis for them, and we try to be quite conservative, and we still find it very robust. we think that this monazite plant is a real winner.
And with regards to the contribution from byproducts like uranium, you talked about uranium extraction in the past and possibly other products too. I mean, is that a big part of your own numbers? We'll see what comes out of the scoping study, but what's the dependence there? Yeah,
look, the main focus in the monazite sands and the main value is in the neodymium, the praseodymium, the NdPr. And that's probably 65% of the value in a ton of rare earths. So it's really driven off of those two elements. And then the other elements, are second, third, fourth to that. So yeah, but everything counts. I mean, if you've got a saleable product, it all adds up. When you start looking at, margins that say are, 20, 30, 40%, another 5% here or 10% there, it's material. And we think that the fact that, a lot of the rare earth producers or wannabe rare earth producers, they don't want the uranium. They don't want the thorium. We want it because it adds value. It adds value and it improves the economics of processing monazite sands.
So are you, with regards to, obviously, scoping study that on the rare earths component, we must remember you're a uranium company, you're a uranium producer. You've produced the most uranium in the US out of the White Mesa mill. You're going to have to start spending some money on that side of things too. Again, what's the moment you're looking forward? Because, for me, it's kind of like, when does that fat lady start singing?
Yeah. Well, look, and I've said this again publicly, that we can get our uranium production going at quite a large scale, probably pushing 2 million pounds a year with about 50 million of working capital. We do not need a lot of capital to restart our uranium production activities. Now, when we talk separation, at least initial stages of separation, we'll get better numbers in the next month or two. We think for 100, 200, 250 million, we can get into production of separated oxides for that kind of order of magnitude of cost. Now, when you look at either one of them in isolation, the strike rate to get there is so much lower than others. I mean, a typical rare earth production company with the ability to have full integration, you're talking $1 billion to $1.5 billion. And when you talk about a lot of these uranium projects that you talk about, these wannabes, they're saying they need, $300, $500, $800 million just to get started. So our strike rate is remarkable on all things critical materials, uranium, rare earths, vanadium. No one can beat us, in my opinion, on capital strike rate to get back up into production at significant scales.
That's interesting. It's interesting. You kind of forget about the debt component these companies are going to be laden with, which they are.
And we're debt free, and I'm not adverse to debt as long as you have line of sight to revenue streams. And so yeah, look, we're going to look at how we position ourselves when we need to start up either uranium or the rare earths. But again, we've got a strong balance sheet right now with, depending on how you count it up, in the order of $100 million of working capital, cash working capital or inventory. So we're not far off of the mark of having the funds to do all the things we need to do.
But don't spend it till you need to, till you've got certainty around the market. Okay. Okay, really interesting, Mark. Look, I appreciate the catch up. It was really a kind of catch up because the market's just got a little bit frothy again. I do think that these big generous US funds looking at this space now, a very small space, it's kind of like you've got a ton of water and one tiny little spout it's got to shoot out of. It feels like the momentum is building. And it's really a question of trying to understand the timing. So get in while you can, I think would be my advice.
Well, there's only so much legitimate product to invest in. Okay. And there's different types of investors. There's people that are just trying to ride the wave and get out. And then there are people like these end users that are looking long term, and they've got to focus on those that can do it, and those that will be there, and those that can produce and have the cost structures to deliver. That's where Energy Fuels is. We're not riding a wave just because we're a flash in the pan. We are doers, and I think we've proven that over the years. And on the uranium and the rare earth fronts, we are going to continue to be doers and deliver.